All right, welcome back to the Agent Academy podcast, where we help you dominate the real estate game. I'm Big Mike, and today we're talking about the biggest mistakes buyers make and how to avoid them. And today I've got a killer guest with me, Shea Neely, a top mortgage expert with Northpoint Mortgage. Shea knows exactly what it takes to get buyers to the closing table. Shea, thank you for joining us.
And I appreciate it. Good morning, Big Mike.
Hey, man, I'm glad to have you on. So, Shay, tell us a little bit about your background. How did you get into mortgage lending, and what's kept you passionate about helping buyers?
Yeah, so I've had my mortgage license, I think, for since 2004. So we're running on 21 years in the business. I feel like I can honestly say I've probably seen it all. I have a branch in Jackson, Georgia, so I am local, and we're not a broker. We're a correspondent direct lender. So everything is done, in-house, our funding, closing, processing, underwriting. We're delegated with Fannie Mae, Freddie Mac. So I feel like that gives us a lot more control of our loans, and we can get things done fast, and makes us very competitive.
All right, so I'm going to touch on that for people who are listening to this who maybe don't know the difference between a mortgage broker and what you guys do. What's the differences?
Yeah. So a mortgage broker, um, they basically, using the word broker, they broker out your loan to a third party lender. So basically, they really have no control over the loan except for originating it.
Mm-hmm.
So, like, let's say if I was a mortgage broker and I'm going to take your loan and I'm going to send it to Wells Fargo, for example. Let's just say I'm going to broker it to Wells Fargo. So Wells Fargo is going to process it, underwrite it, close it, fund it. So me as this broker, I don't work for Wells Fargo. So I don't have as much control as I would if I was somebody that worked for Wells Fargo.
Mm-hmm.
So there's a big difference, in my opinion, in the level of service when you're dealing with a direct lender versus a broker.
Mm-hmm.
Um, Communication, you know, you as all people know that you can get me at 9 o'clock at night, 10 o'clock at night on weekends, but to be honest with you, brokers, I mean, good luck trying to get in touch with somebody at Wells Fargo on a Sunday night.
Yeah,
Okay. So that's just some examples.
yeah. I mean, shoot, I might give you a call, and you might be in a duck blind somewhere
That's right.
in
That's right.
Missouri, and you'll pick up the
That's right.
phone.
That's right. It's happened many times.
Well, man, I'm sure that you have some crazy stories that we can get into, but right now we're going to talk about some of the biggest mistakes that buyers are making in the market and how we can pretty much avoid it and what they can do to avoid making these mistakes. So I've written down a few that I've seen in my couple of years in the business, and you've brought a couple. So the first one that I've got is not getting pre-approved early. I think it's pretty large one. Like waiting too long to get pre-approved. Why is that such a critical mistake?
Well, couple things. Um, Agents want to sell houses. I mean, you guys, that's your job, that's your passion.
Hmm.
But at the same time, there's a fine line between um, wasting time, energy, gas, funds on someone that's not ready to purchase a home
Hmm.
versus building a relationship. So, um, one of the main reasons is somebody needs to get pre-approved as far as from the agent perspective is I want to make sure this person can purchase a house, that I'm
Hmm.
not out here all weekend with this person. Come to find out later, they can't even purchase. So that's one good reason. The other reason would be the, um, the borrowers, you know, they need to know what they can qualify for. There's so many different mortgage programs that a lot of folks might not realize how many programs they can qualify for.
Hmm.
We have a lot of down payment assistance programs, and they each have their own separate guidelines. So we have to, once we do a pre-approval, we have to figure out, okay, what all does this person fit into? What all loan programs can work for them? We have conversations about money. Okay. How much money are you going to need to close? How much money do you have now? Are you able to get a gift? Can you withdraw money from your 401k? Um, a lot of folks, I think, first time home buyers, a lot of times I think they could get into a home with no money, which is really not the case. You know as well as I do, even if you're doing like a USDA loan, 100% financing, zero down, right? You still need money for earnest money. Okay, so that could be anywhere from $1,000, $2,000 for earnest money. You got to pay for your appraisal up front. That's around $620. And then most people get a home inspection, right? So
I
that's
recommend it.
another $400 or $500. So, you know, if you're working with someone, I mean, they got to have at least, I mean, 2,500, 3,000 range, in the bank just to do anything. So getting those questions answered on the front end. And the third biggie is credit, right? I don't think people sometimes realize about their credit scores. And as we all know, or we all should know, Credit Karma is not the best barometer for mortgage credit scores. I think Credit Karma is very liberal on the scoring model they use versus mortgages. Mortgages are more risk based. So a lot of times the mortgage scores are going to be lower than what someone sees on Credit Karma. So we need to get those credit report pulled, um, see what the scores are, and also sometimes there's things on the credit report that somebody's unaware of. They might have had collections, medical collections, other type of collections that they were unaware of that are affecting their score. So we want to make sure that the accounts that are on the credit report are accurate. Does anything need to be cleaned up? Hey, and guess what? If the score is too low, we help people at no charge to say, hey, this is what you need to do. If you do X, Y, and Z, your scores can get up to, acceptable range, for a mortgage approval. We have um, credit simulators that we can run credit reports through that'll tell us things to do, paying down credit cards, paying this off, paying this down, open up a new credit card, pay on it for 6 months, different things that we can help somebody with. So um, I think those three reasons are probably the good ones for that question.
Absolutely. And I know for a fact about the you guys helping buyers build their credit because we did that um, last January. Couple one of my buyers came to you about 8 9 months before and was like, I want to buy a house, but credit was pretty bad. And you said,
Right.
follow
Yep.
the plan. Here's what you need
Yep.
to do. And within about 7 months, we were looking for
Yep.
houses, and hey, we closed on it. So it
That's
works.
right.
It works. Just because your credit's not right now, we can formulate a plan, get it to where it needs to go, and get you in the house.
And Mike, the thing is, it's like we could come up with a plan and we can tell the
Mm-hmm.
person, but guess what? The person's got to follow through with the plan.
Mm-hmm.
So at the end of the day, the ball is in their court. It's like here, we're giving you the pathway to home ownership, but you got to do it,
Mm-hmm.
and I feel like so many times that people just don't follow through, with the plan, and they just are in this constant cycle of having to live with family or rent.
Mm-hmm.
But if you stick to the plan, we can get you there.
That's right. That's right. I think that's probably one of the biggest ones is just not getting pre-approved early. But mistake number two I've got here is making big purchases before closing. So anything from
Yeah.
going out and buying a brand new car right before you close on your house, or going to Farmer's Home Furniture and putting $10,000 on a new bedroom suit and living room suit on their credit card. Those
Right.
kind of things. How can that wreck the deal?
So here's what I have found, and after doing this for 21 years now, there's certain things that I noticed, like patterns, that sometimes to me are unexplainable. And the biggest one that I see, and I'm sure other lenders out there can testify to this, but I can't tell you how many times that I pull a credit report and I see that this person just purchased a brand new vehicle within 30 days of deciding, hey, I think I want to buy a house. I've often tried to like wrap my head around the logic, right? The only thing that I could come up with is that they go to the dealership, right? And they figure out, hey, I got approved for a car. I probably can get approved for a house, right? So, but really, it needs to be the other way around. You get your house first, then go get your 2025 Ford 250 diesel. That's when you do it after you buy the house. So, but here's what happens. Not only does it affect your debt to income ratio, right? Because 30 days ago you didn't have that $1,000 auto payment, right? So that means that person, and this is just a scenario, but let's just say before they bought that, they could have been pre-approved for, let's say, 350,000. Well, now they just made that big purchase on that auto vehicle. Well, now they only can qualify for 150,000. And as well as I do, trying to find something for 150,000 in this market is almost impossible.
Pretty much.
So yeah, so they just absolutely just killed their buying power because of that purchase. Here's the second thing it does, and most people, you don't realize this is going on, okay? But when you go to an auto dealership and they pull your credit, well, the finance guy, he's trying, obviously he's trying to get hopefully the best deal for you, the best interest rate. And so they shop your credit around. I mean, I've seen credit reports where an auto dealership has pulled somebody's credit up to 30 times with different banks. And that will definitely decrease somebody's scores temporarily for 2 or 3 months. I mean, I've seen scores drop as much as 100 points after leaving a auto dealership. And they're not telling you they're doing this, right? You have no idea they're pulling it 30 times. So, trying to hold off on those big purchases, wait on that big vehicle, wait on any, big, large furniture purchases, loans, talk to the loan officer first, say, hey, this is kind of what I'm thinking about doing. Is this a good idea? Yay or nay, and we can advise them, say, hey, you know what? I would hold off on that. If you're thinking about buying a house in the next 6 months, you might want to hold off on that just for a little while, right? Because of their buying power and what it can do to the credit scores.
Yep, absolutely. I can't agree with you more on that. Mistake number three I've got is one that I'm pretty sure you're going to be able to talk for a minute on, not understanding the different loan options. So
Right.
maybe
Yeah.
locking into a wrong loan. How often do you see people who misunderstand the loan options?
Yeah. It's quite frequent. A lot of times I feel like people think that they got to have 20% down,
Hmm.
and I'm thinking that might be from listening to grandparents, parents that haven't purchased a house in 30 years. That it's just this thought process out there that, unless you've got 20% down, you're not going to be able to purchase a home. So, borrowers not understanding, saying, hey, there's all kind of loan programs out here, um, with minimal down payments or no down payments. And we've got a lot of down payment assistance programs. So, understanding that can definitely help someone get off the couch, decide, yeah, let's go purchase a home and quit paying rent, because you know what? I can get pre-approved.
Yeah, and that's talk to your lender, find out the different options. I mean, every lender has you can get your VA, conventional, FHA, USDA, but I have found that most lenders also have different options that they can also have with whether it be down payment assistant programs, just variable programs that you might qualify for. So
Yes,
always just
definitely.
talk to the lender about that. Um, Mistake number four: failing to provide documents in a timely manner. Buyers might drag their feet on sending documents. How big of a delay does that cause?
Yeah. So let's just look at it this way. For every day that we don't receive something, could be a day delay in closing, right? So, so many times it seems like everybody is like rush, rush, rush to get the contract signed.
Uh,
But then as soon as the lender gets the contract, for some reason or another, the borrower decides to take their time getting us documents, not really understanding the urgency, especially if you have a closing date that is less than 30 days from the time we get that contract. you know we got to get moving. So if they're getting a home inspection, that's a delay in itself, right? Because I know for us, we typically don't want to get started on the loan until after they have received the home inspection report, reviewed it, and then give me the green light and say, hey, we've reviewed the home inspection report. We're going to move forward.
yep.
Because I don't like moving forward ahead of that, because what happens? People terminate,
Yep.
right? They find out something in the home inspection report, or they can't agree with the seller on some
Exactly.
repair, and they
Hmm.
end up terminating. So during that period of time is when I'm requesting documents. Look, updated documents. Most of the time we already have pay stubs, driver's license, bank statements, documents that I would have received, during the pre-approval. But let's say they haven't found a house for 2 or 3 months. Well, we got to get bank statements updated. We got to get pay stubs updated. Um, Other, depending on if they're self-employed, if they,
Verification of their job in case they've
yep, we got to
changed.
get, yep, verification job. And hey, and a lot of times with those verifications, sometimes we need the borrower's help getting that person in HR, or whoever, to be able to get back with us if we need
Mhm.
them to fill out a verification of employment form. If somebody's renting, sometimes we need a verification of rent, and we've got to get in touch with that landlord, and we've got to get that landlord to get it completed and get back. So there's a lot of things behind the scenes. Getting insurance, right? The borrower's got has to have homeowners insurance. So not only are we asking the borrower if they want to shop around and get quotes, but we also can request quotes from some of our local preferred insurance agents, because that insurance is something else that we've got to get the policy in order for the underwriting approval. So they can't just sit on it and take forever trying to get insurance quotes. So we try to push to get documents and get insurance. And of course, we order title docs up front too. So the attorneys are working on getting the title docs put together and get to us as well. So yeah, getting documents to us quickly is very important in order to make that to make those closing dates for sure.
Absolutely. Absolutely. And my last mistake that I have written down here, I have mistake number five is choosing the wrong lender. What should buyers be looking for when picking a lender?
Well, I feel like the biggest thing is communication. I hear that from borrowers and agents, and this is agents on both sides of the table, right? So we try to communicate with emails of updates throughout the loan process to not only the buyer's agent, but also the listing agent, to keep people informed on what's going on through the loan process. And for you guys to be able to get in touch with me, right? Answer my phone, right? We answer our phones,
Hmm.
weekends, after hours, being able to be there for you guys. And to me, that's what's important. Unfortunately, a lot of people, I think, end up contacting your larger online lenders, right? Like your Rockets. Sometimes they'll contact their banks or credit unions, and most of the time I'm hearing nightmares out of it, as far as lack of communication. They didn't get back with me. I'm still waiting to hear from them. And a lot of the credit unions, I mean, credit unions are great for certain things, but when it gets busy, they are just not set up to close quick. I remember when the last time we were real busy. I mean, I remember people telling me that they couldn't close a loan for 90 days. And it's it was mind blowing, mind blowing. But and a lot of times, hey, again, your local banks are great for some things, but we get people pre-approved all the time that were turned away from their local bank. So dealing with someone that's very, you know, I don't know the right word um, as far like credit scores, for example, like for FHA, we go down to 580, right? I can tell you the banks and credit unions, they're not going to be closing loans at 580. Okay. So we're a lot more liberal with the credit score, the loan programs available, the down payment assistance, that are available that you're just not going to find with credit unions, banks, your online lenders, for sure. So we always try to push, use local and use, someone that your agent recommends and trusts, right?
Yep. Yep. We all have a list of preferred lenders that we would work with because on my end, a great lender will make or break the deal. So you got to
That's
choose
right.
wisely on who you're
That's
willing to
right.
put your investment in. So that was mine. I know you came in with a couple more, man. What you got for us?
All right. So we're going to hit a couple, biggies in here, but like changing jobs, right? So, you know, it has happened over many times. Every realtor, every lender has a story about someone that changed jobs and they didn't say anything to anybody, right? Like they didn't think it was a big deal. So if you're, future buyers out there, changing jobs is a big deal, right? So we have to have that information and let's make sure that it's not going to be a big deal. So people that go from a W 2 employee and they decide to take a new job, but it's a 1099 job, right? So
Hmm.
what that means at 1099 means they don't take out taxes. You have to, file your own tax returns. Same thing as being self-employed. Well, if you're 1099, you got to have 2 years of tax returns, and we average the 2 years of that income. And it's after expenses. So it's not off gross, it's off net. So that's a major impact. Also, what if you've been working a job for 5 years and you were making a lot of bonus and commission income that was used for your pre-approval. And then you change jobs to a job that's just hourly or salary and you're not getting those commissions or those bonuses. Well, that can have a major impact on the income that we're using for your pre-approval. Bonuses and commissions, we got to have it for at least 12 months to count any of that. So changing jobs, we got to know it up front. Don't do it during the loan process, definitely without speaking to your, loan officer first to give us a heads up. Is it a good idea? Should I wait? Let's talk about it first. All right. So the next one is cash, right? Cash. Everybody thinks cash is king, right? You remember, I think people talk about that quote, cash is king, right? Well, in the mortgage industry, cash is not king. Cash is terrible because we can't source it, and we have to source funds that are used for down payment. We have to source it. We have to know where it came from. It's got to be seasoned, right? Cash, we can't source it, season it. We can't use it. So there's a lot of people out there, and I think there's, first time home buyers, for one. I've ran across quite a few folks that had quite a bit of cash socked away at home. And when they're ready to buy a home, they're thinking, okay, well, I'm going to take this cash and I'm going to go deposit in the bank. Okay, that's fine. The only problem is it's got to sit in the bank for a little while, for at least a couple months, because it's got a season. So we don't have to. So that way you're not showing bank statements with this large cash deposit, because then we can't source it. So then you got to wait a little while, right? So we want to keep that money in the bank, not in your sock drawer, right? Um, During the loan process, right? What if you had like a yard sale and you're selling a bunch of stuff on Facebook Marketplace, right? And let's say you had like $2,000 or $3,000 and you just go deposit it. Well, we can't use it because we can't source it. It's not sourceable, place, because it's cash. So you would not want to do that without talking to your loan officer first. And let's talk about it and say, okay, how do we need to handle this money, right? So in our world, cash is not king, and you definitely want to speak to your loan officer before doing anything with cash or big cash deposits, for sure, because that can be a deal killer. It can delay closings,
Yep.
and it can certainly affect somebody's pre-approval time if they had a bunch of cash that they need to deposit.
Mm-hmm.
um, let's see, we talked about auto inquiries. When you go buy a car and that dealer runs your credit 1,000 times, that's going to kill your scores. So you might want to hold off on that if you're looking to purchase a home anytime soon. Hey, collections, medical, folks, you got to pay your bills. I mean, those medical bills that come in, they don't just go away. They will hammer your credit scores. That
Mm-hmm.
that little $50 medical bill that was a little extra overage, a little extra that was over your copay that you owe, and you just kind of threw it to the side. Well, it'll come back and say hello when you go to get a house, and the lender pulls your credit, and that little $50 medical collection has dropped your scores, to 500. So
Mm-hmm.
pay your bills, keep up with those medical bills, keep up with your student loans, right? Don't let student loans get derogatory. You got to keep up with them, keep them paid on time. Um, you know how, Mike, people, here's something else I've seen. People that are renting.
Mm-hmm.
So when you rent, you could be paying certain things like the cable bill, like let's say the cable bill, maybe utilities are in your name, certain things. Well, you go to leave the rental place to move back to, like, you're going to move somewhere else. Well, that cable bill, the last cable bill, well, if you've moved and you didn't put any kind of forwarding address, or you didn't let the cable company know what's going on, and you never pay that last bill, what happens?
They're gonna put it up for collections.
Yeah, it's going to go to collections, and it's going to find you later
Mm-hmm.
after it's dropped your score 100 points,
Yeah.
right? So like when you move, you got to make sure that those last bills, that you keep up with them and make sure you keep them paid,
Mm-hmm.
right? So you don't have some collections catch up with you later that you had no idea about. And cell phones is another big one. People will change cell phone services, and then for some reason they never pay the last bill from the previous cell phone company, and it just sits out there in collections
Mm-hmm.
and drags your score down. That's another one to keep up with, cell phone changes.
Hmm.
And then the last one is saving money. I mean, I can't emphasize that enough, that in the market that we're in, the easiest way to purchase a house is an FHA 30-year fixed mortgage, 3.5% down. We can go down to 580. Your debt ratio, FHA with debt ratio, is probably the highest. I think FHA allows you to go up to 55%. There's no other loan program that'll let you go that high. 3.5% down. Easiest We don't need tax returns. If you're a W-2 employee, we just need pay stubs and W-2s and a bank statement. It's the most easiest way possible, but you got to save some money, 3.5% down, right? And Big Mike can negotiate the seller to pay the closing costs, right?
Right.
So we worry about that 3.5% down. So yes, there are other mortgage programs, but guess what? Conventional, you can't go up to 55% on the back end. You can go up to like 45, maybe 46, 47 if you've got great credit with large down payment. Okay, USDA, that has the lowest debt to income ratio limits. I mean, it's like 43%. I mean, is a lot lower, and what that means is you can't afford as much house with USDA like you can with FHA. VA, now VA is a wonderful, great program. Zero down. We can go, I think we go down to 580, either 580 or 600 with VA. And VA can be very liberal with the debt ratio as well. But you got to be a veteran and have your eligibility for VA. But it's another great program. And then, and I know we can talk about down payment assistance programs on maybe on a different podcast.
Yeah.
And that's all we talk about is just the different down payment assistance programs, because there's a lot of them out there, and they all got different criteria. But most of them need credit scores above 640. So that's another little key takeaway, is trying to make sure that you got your credit, hopefully above 640, because that will give you more options and choices on programs for sure.
Gotcha.
And I think that's the main ones I had.
Well, those are
And
good.
hopefully these were some good
Yeah.
Nuggets today on mistakes not to make.
Absolutely. Absolutely. Well, before we let you go, man, I've got about 4 little rapid fire questions for you real quick.
Yeah.
You ready for them?
Yeah, hit me.
All right. What's one thing most buyers don't know about mortgages?
Well, I think they don't know that they don't need a large down payment.
Yeah, we
I
touched
think
on it.
that's,
Yeah.
we touched on it. I think that's one of the big ones. They
Yep.
don't know that there's other better choices out there.
Absolutely. What's your biggest pet peeve as a lender?
Man, a pet peeve. And I think we kind of touched on this already, but a pet peeve is just not getting us documents in a timely manner, just having to wait days for something and just bug the mess out of somebody just trying to get a pay stub. It's just a pet peeve.
I know, because then I'm getting a phone call. Hey, have you heard from such and such? We need this today.
That's right. That's right.
Well, let me try to call them again.
That's right.
All right. So what's the fastest loan closing you've ever done?
Man, I want to say, I think I've closed one, and this was probably a conventional mortgage, but I think we closed one, I think maybe 7 business days one time. That's definitely not the norm, right? Because
that's quick.
I mean, most people their due diligence is 7 days, right? So anyway, but I think we can definitely do it, but that's basically somebody saying, hey, I'm not getting a home inspection. There is no contingencies. Let's just get it closed.
Yep. One piece of advice for buyers in this market.
And important right here, right? So, interest rates, hey folks, we're not in the 3s and 4s. And I really don't think we're going to see 3s and 4s anytime soon. I think we're in a market where interest rates are in the 6s for 30 years. We're in the 6s. And it's forecasted to kind of stay in the 6s for the, short term, this year going into next year. If for some way if rates were able to dip down in the high 5s, I think it's going to be a party. There's going to be people coming off the fence. So, but with saying all that, if you find the right house, you got to go ahead and jump. You got to go ahead and get it. Don't wait for rates to drop and it become a bidding war on every property when rates drop. You know what? Go ahead, get your property now, because you probably can get closing costs paid. You probably can get a better price on the home, maybe. And guess what? When rates drop, if they drop, you can always refinance. You know, we all of our customers, we have them on a list ready. You know, when we know when rates get to a certain point, we're going to be contacting them saying, "Hey, let's refinance. This makes sense." So what I'm getting at is, don't lose your forever dream home waiting on rates to drop, because
Mhm.
you might be waiting for a while.
That's a great piece of advice that everybody listening to this should take, and I think we can agree on that. So man, you've dropped some serious knowledge today for any buyers that are listening. Um, just follow all these little rules of what not to do and what to do. Give us a call. We'll get you in a house. He emphasized pre-approval, staying informed, and working with a trusted lender. And if you're ready to make big moves in this market, give me a call. Give Shea a call. Shay, how can they give you a call today?
My cell number 404-444-3289. That's my cell. Best way to get me. Call me anytime. Text. Best way.
Yep. I appreciate it, man. Thank you for dropping these gems of knowledge today. We are glad to have you. And if you need to get in touch with me, you can follow me on social media at Big Mike Sales. Go to the link in my Instagram bio. You can schedule a 15-minute home buyer call right there. We'll get you going. Appreciate everybody.
Appreciate it. Enjoyed it.